Hello, and thank you very much for joining this afternoon's webinar, hosted by Ezbob and moderated by Finextra Research. I'm Gary Wright, I'm the head of research at Finextra, and as I say, I welcome you this afternoon for what I hope will be a very insightful, challenging conversation on today's theme, which is how to accelerate digital lending with data and automation. And I'll come back to that topic and some of the things we're going to be discussing in a moment. But may I say first and foremost that the contribution we look from you is via the link that we provide, so that you can ask any question, you can ask any comment, you can raise any point you wish during the session. So I do encourage you to do that. And also to set the scene for the topic, there's a couple of assets that I'd ask you to have a look at and download during the course of the webinar. There are two we provided for you through the link. The first is how Ezbob Loans tapped advanced technology to fuel its 300% growth. It's really about transforming this lending market. And the second one is innovation in the digital post-COVID world, which we've been looking at. We're going through the struggles of the pandemic now, but at some point we will emerge from it, and what's going to be the impact on the lending sector to the small businesses around the globe, around Europe particularly. So the format is, I'm going to introduce the speakers in just a moment, and I'm going to ask each of them in turn to spend a couple of minutes giving us some contextual background, some high-level points around a discussion that we're going to follow up with and go into in much more depth. And again, I encourage you to take part. So let me introduce the speakers in turn. Firstly, we have Lucy Hassan, who is the co-founder and COO of Ezbob Loans. We have Paula Papanicolaou, who is the Executive Director and Group Head of Innovation at Intesa Sanpaolo. And we have Thomas Guriel, who is the founder and CEO of Ezbob. So thank you very much for your contribution today. Look forward to hearing from you and look forward to a good debate around a topic that I think is hugely, hugely important, particularly to such a large market sector across Europe. So let me start. Let me just start by asking each of you in turn to give us a few of those comments I referred to. And Thomas, can I go to you to set the scene from your perspective? Thomas.
Yeah, so first of all, Gary, thank you very much. Very exciting to be here today. Great to see Lucy and Paula. I haven't seen them in person for a long time. So hi, girls. Good to see you. So in general, those who don't know Ezbob, we are a SaaS digital lending platform specializing on SME. In the past year, we start moving more into sort of like the front end of the lending solution, focusing more on the lead origination, onboarding, and real-time decisioning. What we're trying to do is trying to sort of like catch the moment. So when a small business is opening bank accounts or asking for a loan, for them, this is a memories that matters. And this is exactly where we sit, trying to provide personalization in that kind of process and make it profitable. And obviously help the financial institution to scale that business going forward. Talking about setting up the discussion is obviously COVID create a very good platform for the banks to accelerate the entire kind of digitalization that started as a trend before that, and now moving into more necessity kind of mode, implementing those digital solutions to help them to scale the business, make it more profitable, and cater and personalize their solution to the customer.
Tom, thanks very much, and we'll certainly pick up on some of those points. I think it's interesting that we can look at this from various financial institutions' point of view, the traditional bank, new entrants, particularly with Ezbob Loans, and like to pick up on some of the detail around those comments and how you do transform, and certainly where are we today versus where might we be in 18 months' time as we emerge from the pandemic, and businesses need greater support financially. We'll go into that. So thank you for those comments. Lucy, I'll turn to you, if I may, for some introductions from you.
Thanks, George. And obviously it's great to be on the panel and to meet Paula, because I've heard lots about her from Tomer and the team, and to see Tomer, who is probably scared post-pandemic of how strong my hug might be when I actually see some people. Also really good to be on a panel dominated by women. So thanks, Tomer, for that opportunity. Our background, so I'm COO and co-founder of Ezbob Loans. Sort of what we're going to talk about today, the acceleration of digital lending, data and automation, is core to our mission. We've been around since 2016, working really closely, hand in glove, with Ezbob, with that mission core to everything that we have been doing together as a partnership, and working to improve on the technology to improve the experience, both for us operationally, for our customers, and to meet sort of the standards, the reg and compliance standards of a tier 1 bank. And that's very much been our focus for the last sort of 4 years. I think today we're going, as we get into the panel discussion, we'll start to talk about what we think that means going forward, and actually what has COVID meant for the industry and what opportunities does that open up for everyone. But I'm delighted to be here today, so thank you.
Lucy, thanks very much. And again, we will put the customer at the forefront of this. Partnerships between institutions to create the ecosystem is obviously the purpose of looking at the customers. And so I'd be keen to pick up on how they benefit and what the value that comes from the greater automation of loans and lending. So let's close out this first session. Paola, over to you for your comments, please.
Hello, Gary. Hello, everybody. Thank you. It's been a pleasure to be here. So on our side, we're in Intesa Sanpaolo. We're the largest Italian bank. We serve approximately 12 million customers in Italy. And we started, let's say 3-4 years ago, our digital journey, because we made the decision to digitalize our traditional bank. So we did not create a spin-off of a digital bank, but we've started reviewing all of our processes and our offering, and also supporting our clients that are, of course, of all ages to, let's say, approach technology and approach also the digital channels. And approximately a year and a half ago, we met with Ezbob, and we started this very successful journey together, which was to create a smart lending product near real time for SMEs. And I have to say, unfortunately or fortunately, the moment was absolutely right, because we launched this product in July, and you can imagine it has been of huge support to Italian SMEs, and of course to our bank, because we were able to stand next to our clients in such a difficult moment with an end-to-end, fully digital lending process.
So that's very interesting background to some of the points that I'd like to pick up on how and why the industry shifted and why it needed to, and perhaps even more so why it's now such a good time. So thank you each for the opening remarks. Just before we go into another conversation, and I'd like to pick up where you finished then, Paola, and come back to you in a second, but we've got a couple of polling questions, and through the link that we provided, it'd be very, very good if you could respond to the first one. So let's post that now. The first poll question is, post-pandemic, how strong will demand be for SME borrowing? And there are 4 options. The first is very strong demand, more than pre-pandemic. The second, about the same as pre-pandemic. The third, less than pre-pandemic. Or the fourth option, much less than pre-pandemic. So if you could take a few seconds just to give us your responses, then I'll share them later on as we go into the session. So Paola, I'd like to come back to you, because as a bank, it's not easy to simply change structures and change approaches, and particularly against the background of a digital transformation, which everybody seems to talk about, but it's not a snapshot. It's quite a long, elevated journey over time. So I suppose it'd be really good, given that you talked about the smart lending proposition you have now, what was the problem before that you were trying to wrestle with, and how have you gone about handling the application and approval process for the small business market? But the question really is, how did you do digitalization of this process, and what drove you to do that? Over to you for a response, please.
Thank you, Gary. Well, obviously, the approach we had before on lending was a very traditional approach. So, the SME or the entrepreneur would come in our branch, they would discuss their idea of a project that they wanted to finance, and then we would look for the right proposition and then start, the application. And generally, to start an application, you need to bring lots of papers in the bank. So, and many times you have to come back and bring another paper. And there is really lots of paper and lots of people inputting data into systems manually, of course, to then, start the loan evaluation. So this is the traditional information. Plus, and there are two things. So, a lot of manuality, lots of meetings, lots of papers. Plus, the way we used to value the loan proposition would be, of course, a traditional way. So based mainly on balance sheets and on the type of project we would finance. In this transformation that we did, we actually changed completely everything. And I have to say, we really rethought the process. So we did not start from the approach, okay, we have this process, let's make it digital. And so let's have people, putting PDFs in an application or whatever. But we really changed that. And we did this, of course, going out to the market and reaching for somebody who actually did this from scratch in a, let's say, native digital way, like Ezbob. And, we followed their suggestions a lot. It was a fully digital process that tries to leverage as much as possible into information that are available, transforms data into inputs, and that makes it very, very easy as well, or at least the easiest possible way for an SME to do an application. Plus, the second thing that we really changed was the way we evaluate the operation. So we've introduced, for example, the cash flow idea. So thanks to PSD2, we went out and reached for this information. And so we're not basing our evaluation on the balance sheet that, in the best case, it is 1 year old, but we're basing our evaluation as well on the cash flow. And so with a new element that is fresher and more dynamic, I could say, from a balance sheet compared to a balance sheet, especially for a small company. Plus, we've introduced new elements like the web sentiment, which is another thing that is very interesting to evaluate for a company. So we really, I could say that we really made a big relevant change to our approach and our model.
So let me just pick up on that a little bit. What was the driver? Was obviously a lot of manual, probably labor-intensive, time-consuming processes. How did you start the journey? By changing that from an internal perspective before you looked at the external technology, or did you see that there's loads of sort of great smart technology out there, and how do we deploy it? I'm always interested in what starts the journey, Paula.
I would say two things. It was clear to us that we could reduce manuality and let's say have a more efficient process internally, and maybe have people's time focused on some activities that are more interesting or more how can I say of a higher value, rather than doing, of course, data entry, which is something you have to do at a certain point. And the other thing was we wanted to be quick and offer a good service to our client, especially not having the limitation as well of the opening hours of a branch. Because you can do this, smart lending process anytime, any place. So, maybe it's late at night and this is when an SME has time to actually do this. So it was the idea to change both the internal activities and the service we were providing to our clients. Then we went out. So first of all, we did the internal analysis. We understood there was a challenge there and an opportunity as well. Then we went out to the market and we said, instead of rethinking the process on our own, let's go out and see who has done it and who has done it in a proper way. And it's actually, it's an accelerator instead of rethinking everything. So I think this was the approach, and I have to say it was pretty successful. Internal analysis, understanding of the challenges, understanding of the client's needs, and then going out to the market looking for a solution.
Okay, that's a good response to that question. Thank you very much, and something I want to build on. But can I push this across to you, Thomas, because you're seeing it not just from how banks might approach it, but equally from an industry perspective. So given that the SME sector is so important to the whole of Europe, and particularly post-pandemic, I suppose the question I've got for you is, how have you seen this total business transform itself, and how have you developed some of the functionality that picks up on some of the points that Paola mentioned? Because it is a huge amount of data capture up front to manage and analyze in speedy times to get these sort of, I won't call instant decision, but fast decisions. So the thought process about that. And there is one question that's come in, so I'll give this to you as well, Thomas, and that is, do you see a great deal of complexity in the processes around banks in Europe that means you have had to almost tailor solutions to banks, or are you asking the banks to rethink, as Intesa has done, their approach to make the best use of the technology? Thomas.
Yeah, I'll start with the first one. So in order to answer that, for me, what I realized back in 2016, 2015, is that if you look really at the high level of the banking sector and you see the evolution there, very 10,000 feet above, I would say that there were been two evolutions where the second one just started. So the first evolution was about taking papers and make it electronically. And that was everything all about until basically 2010, between 2010 and 15. Now, when you have the availability of a lot of data coming from many data sources, from regulatory point of view, from fraud point of view, for verification point of view, business, personal, properties, social, you start suddenly going into the second evolution where you actually pull up the information by yourself, which is independent, and would allow you to actually use analytics and machine learnings and AI to make even smarter and better decisions. So once we realized that, that's where we decided we're going to focus into that and help the financial institution making that transition. And that's going back to your second question, is that what we realized at the beginning of the evolution, banks actually approached that kind of change with cautious. So they created sort of like a ring-fence solutions, branded differently, or ring-fence within the organization. And what we see right now is everything start being embedded within the general, sort of like the overall kind of organization under the main kind of brand. So you see that also the banks feeling more comfortable with the new solution in the markets, more comfortable with those fintechs of the markets. I believe that, in our space, we are part of a big ecosystem, that we have a lot of other good kind of partners and vendors that provide you a holistic kind of solution for the problem. But when you look at the banks, for them, it's a win-win situation, because the limitation of the physical world suddenly disappeared with the availability of a solution that is available 7 days a week, with the ability to getting much more information about the customers, with the ability to make smarter and better decisions and execute it quickly. So on one hand, the banks can cater better the customers. They can actually do it in sort of like in a smarter and better way, and make it profitable. Just to give you some numbers, the overall numbers of issued traditional loans, as Paola described, which was the traditional way, it was around $3,500 to issue a loan. That would take probably 7 days of actual work within the banks, with over all the kind of people that involved in the process, that could take weeks and more. And with the technology, you're also able to do it to relatively very cheap. I believe saving around 80% of the cost. It depends on the amount of volumes that you put on your system. So the more volumes you can put on the system with technology, the less it costs you per loan if you compare it in the past. So the way I see it, it's really a win-win situation between the financial institutions and the SMEs on the other side. As Paulo said, it requires a change in the mind of the banks. We're talking about risk. Suddenly you have a lot of data which never been assessed before. You talk about digital channels, POS, price comparison sites, and other kind of digital channels that you need suddenly to originate your business from, which is not the same as knocking on your door when you had a branch before. So all those kind of things is a change of mind that you need to build yourself into a digital world. And I think that this is the key challenge for the banks. Those who will be able to adjust and adapt to that will be the most successful one.
And there's a few questions coming in, for which I thank everybody. But one is, go back to that before we finish on this topic, and I come to Lucy. Paula, sort of how far back in the process did you have to go to change this? If you look at the saving there that Tommy you talked about, the 3,500. One of the questions is, how radical was the program of transformation to take this segment of business and really change it? Because it isn't just about a partnership; it's about a number of different things that come together. So, how significant was the program?
No, of course, first of all, we're just at the beginning of the program, to be very honest. I mean, this is the first component of a larger product of, digitalization of the relationship with SMEs. So if we start from the bank, and so from the inside, we went back a lot to also understand, for example, which are the right SMEs to start approaching for this new digital process, first of all. So we did create this offer, and then we said, okay, we can't start on all of our SMEs. We have to also test it on the ones that are a little bit more digital mature, let's say. Then we went back to all of the internal process. We discussed with credit, with compliance, with the legal teams to understand as well what it meant to bring an offline process online. Because there are many relevant things that could appear details, but there are also sometimes some legal constraints or legal interpretations that you need to review. So we really went through everything in a very, let's say, critical and positive and transformational approach. So it took us some time to do, first of all, this, which was, the internal understanding of what is our process today and what we can change or what we still need because it's an asset, or what we actually don't need anymore, and maybe we need to understand how to remove it from our process. Then the other thing is that we went out and we started understanding how to approach also our clients. Because, many times you say, oh, it's nice to have a digital process, but then sometimes the client is not really ready to use it. So there is also an educational process with the clients to, try and teach them how to approach this new solution. Because sometimes, there is fear, sometimes, so it's nice and easy. You get into the platform, you introduce the information, and then, immediately after 10 minutes or 30 minutes, you have an answer. Not everybody is ready for that. Some clients are afraid they could make a mistake. So we also had to build channels around that and support around that to actually support our clients to utilize this solution. So it's a very profound transformation you need to go through. It's not you build a process, you buy a solution, you put it there, and then that's it. No, it's really a journey.
Well, thank you for that and for highlighting the complexity. And of course, it's also, I assume, and Tommy, you'll have a view on this, fundamental to a bank's approach to digital transformation anyway. You can't change one aspect of one function. You're thinking about the whole acceptance of going digital, as they say, and pushing on with that. And I suppose you may have a comment on that. But just to go back to the point that we were talking about there, how have you seen this whole process be more essentially needed because of the pandemic in 2020? Clearly, it's been a big challenge to the business's source of lending and obviously growing business. So how did you see this whole business in 2020? Did it stagnate? Were there some banks trying to do things? And how do you think it might be unleashed as in 2021 we emerge from the pandemic?
The question for me. So in that sense, Gary, I think that 2020 was a challenging year to begin with for financial institutions. Obviously, it hit everyone unexpectedly, and banks had to cater for that and make sure that they can provide for the existing customers the need and the access to capital, definitely supported by the government. I think that 2021 created, I believe, a great opportunity, because in 2020, through the government programs, banks could really establish stronger relationship with their customers, with their SME customers. So suddenly you have banks with a large base of SMEs and a balance sheet, that was provided through the government programs. And now in 2021, they need to decide how they're going to pursue. First of all, in 2021, from a strategic point of view, it's a time to make decisions, how to attack sort of like the digital element going forward, meaning that whether or not we see the light at the end of the tunnel, or the COVID is with us now here to stay. And as a result of that, we need to build two different kind of strategies. In both ways, you need technology in order to help you, because without remote banking, there's no future. And suddenly this kind of technology has become a necessity rather than a trend. So in that sense, that's on one hand. On the other hand, you have really great relationship with customers that you want to expand and to build on. And therefore, the combination of technology that will allow you to cross-sell and offer other kind of product will create great opportunities for the banks and actually make the lemonade as a lemonade, talking about 2020. That's the way I see it.
Thanks, Thomas. And Lucy, just before I asked you to comment on that journey 2020, 2021, and a couple more points, let me just thank everybody for responding to the first poll question. Just to remind you, the question was, post-pandemic, how strong will demand be for SME borrowing? If I round up the percentages, the options were very strong demand, more than pre-pandemic. Interestingly, 72%, about the same as pre-pandemic, 14%, and you can guess where this is going now, less than pre-pandemic, 13%, and much less than pre-pandemic, 0%. So let me just ask everybody, while I have your attention, to respond to the second poll question, which is accessible to you via the link. And it is, has open banking data improved your lending risk and affordability analysis? And the options are a straightforward yes, or no, or I don't currently use open banking data in lending analysis. So if you could give us a response to that, I'll share them as we go forward. So Lucy, a comment on what Thomas was saying about 2020 and 2021. And now you're not an established bank changing processes. You're a new venture into the market. So it's interesting to see how you launched and how you approached this challenge of automating the processes for lending. Lucy.
Yeah, I think we're very much the hybrid. So we're basically our own independent company, but we are owned by NatWest. We're very much sort of in a similar position to Paolo, but slightly separate. And actually, when we went about it, we decided, because of, back then it was 2016, change budgets and other sort of bank sort of infrastructure and governance, we actually went the other way. We spent a lot of time researching the market demand, and the UK market's obviously slightly different. And what we saw is that, there was 10-15% of the SME lending market that was in the P2P space, or it was with funding circle. And we wanted to respond to that demand. And so actually we spent a not very long time, as Tim will remember, it felt like a long time at the time, but basically over a period of 12 months, we basically designed and developed an end-to-end proposition with Ezbob. They were transforming their business model at the time, and we worked together to effectively launch a business in 2017. And we did that. We launched it independently with an independent brand. And so in many ways, we were very much like a sandbox for the bank. So we were there using data to automate CDD and onboarding, using data to automate credit decisioning, using data to automate affordability, and basically using data to manage customers in life. And, doing that, we were basically, I think there was a lot of people in the market at the time who had websites at the front that were basically saying it was digital experience, but really it was a website at the front and there's a lot of people behind. But, over the course of the last 4 years, we have issued loans, many loans in under an hour, and in minutes and hours rather than days. And so, Tomer talks about that cost saving, but there is a huge inherent cost saving in that operational efficiency, which is really core to what we've been doing. I think when we start to look sort of forward, we have to look back as well. And actually, the big piece is, credit decisioning was sort of broadly available, but whether people trusted it, which I think is one of the big issues with the banks. CDD onboarding was automated and broadly available. Affordability was still very much, I guess, in its infancy. And there was lots of issues around sort of providers pre-PSD2. I think open banking's been really interesting for everyone because I think we all, like pre-pandemic, it was like the dream. We were like, it's the rails, it's going to transform everything, it's going to be the revolution. And actually, it had terrible PR. Like people didn't know what it is. And so it's interesting. I think the pandemic for me was like the petrol that you threw on top of open banking as the transformational power. And when we surveyed, so I did an open banking talk sort of, I feel like it was just pre-COVID up in Edinburgh. And at that point, when we surveyed our customers, we would get 10% take up through our journey, which really slows things down. And no one knew what it was. And post-COVID, when we survey our customers, 80%, they don't know what open banking is. So it was the most terrible branding, but they would link their bank accounts now to support affordability because they've done it for C-bills. And I think that is the behavioural change that we'll start to see drive the change. And the other big thing that I look at when I think about COVID and what's happened to the market is that, like in 2019, there was probably 5, 6, 7 billion lent out to UK SMEs in the market. Last year, under the government schemes, there was effectively 30 billion lent out through B-bills and C-bills. And so you've suddenly changed the behaviour of your consumers. We were a nation of SMEs, and the majority would not borrow money. They were lifestyle businesses, they were family businesses, they were profitable, but people were not thinking about using how they could use leverage to basically accelerate their growth and improve their own business and their opportunities. And so the thing that's really interesting for me post-COVID is actually, have we changed that consumer behavior? Like, have we changed it so everyone's going to use open banking? Have we changed it so that actually people are comfortable with lending as a opportunity and see that as an opportunity? And so I think those are kind of the big things that I look forward to in the market, and sort of the big shift in that will drive the change, and the banks will have to respond to that.
That's interesting. Well, let's sort of pick up on that from a bank perspective point of view, Paolo, on that. The open banking is regulation in some countries and isn't in others, but the spirit of open banking is essentially to allow probably what you've both achieved by working with companies like Ezbob and so on. But and how do you pick it up on Lucy's comment, feel all this change to consumer behavior is really going to happen, picking up on the point you said about there's still some way to go to educate and inform? Paolo.
Well, I think I agree with Lucy. First of all, open banking has been somehow a slogan. It doesn't always, it's not always clear to people's mind what it means. So we started a project on open banking as a group a couple of years ago, and we started by defining what is open banking to us. And what we decided it is, to us, it is the extension of our physical and digital network. So it's how to, extend our network and offer to clients and non-clients banking services or other type of services. So, and the idea behind that is to be, let's say, that central point of access to a client experience. Now, because at the end of the day, I believe that one core thing on open banking, which is a huge opportunity, is first of all, the trust that you need to generate to clients when they share data, when, they access through you, a third party, to buy something or whatever that is. So first of all, it is this. So it is a huge opportunity that needs to be, managed by companies in a very serious and concrete way. So, and of course, it expands the possibility to have creative offerings as well, and to be able to offer a service to a client when they need it. So maybe they're not, in your banking platform, but they are somewhere else and they're doing something else. And here they have the need of a banking product, and there you are with your offering, or vice versa. In a banking operation, they need something else, and there you have the opportunity to offer a product or whatever that is. So it is now, I have to say, and I think that the pandemic has, let's say, facilitated a little bit that process. But I say there is lots of road to do still. So I don't think we are at a point where, extremely concrete. I think it is still in the beginning. And so maybe now people understand what it is somehow, but we are still not using the potential, nor as banks or, financial companies, or as consumers as much as we can.
So thank you. And Lucy, go back to a point there that you raised, quite interested, and we've had a couple more questions as well, on the approach to the lending assessment. There is a traditional way that people have taken data from fairly traditional sources, and it may not be current, and it may not be as accurate as you think it should be. So, and I know that banks spend a long time reviewing their loan processes, and that's time consuming. So how did you think about in your planning that you could radically change the scoring, the assessment process, the risk analysis, to really drive something that gets you to a stage where you've got, I'll use the phrase, instant or near-time decision-making capability? How did you approach that, Lucy?
I mean, we were obviously working with Tomer and his team, but we worked with multiple third-party suppliers. So, what you get with the Ezbob platform, what we receive is we get real-time data from multiple data sources. Some of those are traditional, some of those are not traditional. We back those up with additional data sources, and we basically build scorecards off the back of that. So we weight different attributes depending on those data sets to figure out what we think that means in terms of a risk decision. And I think the real change has obviously been, we pull all this real time, and you can see it real time, you can refresh it real time. And it's a much wider range of data sources than you would necessarily look for potentially in a or that you would have access to immediately if you were doing a sort of manual process, because someone might submit it and it might take days to get to the underwriter. And so I think that's the real change. We basically empower our underwriters and our decision makers with all of that data in one place to enable them to make decisions on the spot. And I think that's the transformation, and that is, I guess, the future of decisioning.
And Tom, I'll come back to you, because clearly what you're offering there is critical to this collation of multiple data points. I'm very keen in how you have introduced the ways in which you can assess and analyze that data using, I assume, advanced data analytics and forms of AI. So how have you now, picking up on Lucy's point about the way of thinking about it, actually practically provided it?
Yeah, I think both Lucy and Paula touched on the right kind of hand. So basically you got a lot of data that now you need to assess, and obviously you don't have anyone that can assess it manually, to be honest. This is too much data. And now you have the machines on the back end to actually take this data and assess and basically bring the level of genius that every bank feels comfortable with, and that's the way they build it. But it's more than that. So on one hand, when you look at risk analysis, it's not anymore risk. I mean, there's eligibility, qualification criteria, there's the risk element and the credit one, there's the affordability, there's the pricing. So suddenly, the availability of technology, it allows you to combine all of that. It sounds easy, but it's not easy. But this easiness of the technology not allow them only to use data and make better decision, but also in the circumstances like COVID, to be able to change the risk and the decisioning rules that they have. So particularly in the banks, to change a risk model or credit model, it takes months, if not more than that. With the systems like that, you are easily being able to change it and see immediately, based on the vintage analysis, to see the impact of your recent change in the rules. So I think that's also an element that is very important. So on one hand, you get a lot of data and smarter decision. On the other hand, you get tools that you can actually change and adjust and modify relatively easier than in the past. Now, let me tell you another thing. I think that what this analytics level brings us to, it brings us to actually shrinks or make the entire kind of onboarding on the engagement kind of process to be much more smarter. So if before the entire kind of engagement with the customer was the lead origination or might be a customer of a bank, and then there's the onboarding of a specific kind of product, and then there was a decision, now suddenly you can combine all of that together and still make all the decision in minutes. So in that hand, it changed the entire kind of ecosystem of the banks of how to approach digital lending. So in other way, the way we see it, if you can come to 80–90% already decision for every engagement that you have with your customers, either opening bank accounts or making a lending decision, you get most of it. You know, you're never going to get 100% automation because there's always an issue of a lot of other data sources and other technology that you have to be integrate. There's also an element of policies and rules that banks wants to have another second pair of eyes. But at the end of the day, if you can cater 80–90% and make a quick decision for all your SMEs kind of customer for multiple kind of products, you got the holy grail. And that's exactly where the banks are heading to with the technology that Ezbob or like the Ezbob can offer.
And picking up on that, because you talked about the whole of the credit risk assessment, and banks can do things differently. Are they actually at the point where they're thinking that differently, or are they just trying to automate a process? To what extent can you now influence the bank itself to think of how its lending and credit scoring policies can change?
So the way we see it is that it's for you, Lucy, sorry?
I have no idea who the question was for.
Lucy, for you.
Okay. I mean, I think basically we've been a great case in point. So basically, we share all of our data with the bank and regularly talk to them about what this means for them in terms of credit appetite, where they can go, performances across the book. We also liaise with them and think about, what are the indicators in the book and what do they actually tell us from an automation perspective. And so the bank is very much deploying technologies across each element of its decision-making processes and looking at how it can use further digitization to improve other elements. So I think, what we're looking at is how do you actually acquire new customers? And because the bank's sort of services for existing customers is very good. And so actually they're looking to digitization around how do they transform all elements, and probably more like what Paola talks about, breaking down individual elements of the transaction, the experience, to work through what they can use, what they can leverage from us, what they can leverage from other third parties to improve, and what they can build to really improve that experience, to start to deliver, the NPS scores that we see across the alt finance, the holy grail of where the banks want to get to with the relationships.
And that sort of leads on to the point of, we've touched on the improvements to the process and the benefits to the customers. How do you actually see this value continuing? How do you think that the rollout of the new way of scoring will help actually grant the loans in a more rapid time, more effectively to the consumers? How sort of big an opportunity is this for the banks, and where will the revenue come from? More loans, or faster execution, or the fact that they are able to also access other services within the banks? Lucy.
I think it's a mix. So there's obvious operational cost efficiency that you leverage from basically using automated processes. There's a huge risk cost as well associated with it. So basically manual processes are risky, they're expensive, they end up in remediation. And so automated processes are much better from a risk perspective and a control perspective. So I think they can leverage a huge cost efficiency. And also when you start to look at the breadth of a bank relationship, you have the lending data, you have all the data, and you have this great relationship. And so when you start to look at that data, there are things that you can do that are much more valuable to a customer. And one of the things that NatWest champions is championing communities, people, and customers, and looking at, how do we solve for the real problems that are coming up in this generation? How do we solve for, the climate crisis? And how do we solve for, the big changes that will impact all of us and impact our behaviours? And how do you then help your customers move towards, a carbon-free future or a net zero future? And so I think using that data is really critical, and starting to think about, it's smart data. So I think we can talk about accelerating digital lending, being a digital experience that gives people, customers, better products, better experiences. It gives them at fair prices. It sort of manages vulnerability and other signs of risk in a customer. So you're delivering fairer products. And so I think, the focus of the banks is very much on how do they solve for all of these problems, and think about them and use data very much as its core to basically build a more sustainable future for the banks themselves and for their customers and the communities they serve. And that's very much the conversation that we have every day.
And Paola, I'm sure you'll have a comment on that there. The other question that came up is, as an SME, I appreciate the decision will be made quickly. What automation applies to my input? Is it the sort of same level of input that I have to provide, but you gather it together more effectively? What is it changing? What slicker process is it making for the initiation of the loan at the consumer side? How?
So, yeah, I think, first of all, to again comment on what Lucy was saying, I fully agree with her point of view. It's a mix of things. And I believe that what changes on the consumer side is, first of all, the consumer can input even less data than what he should normally. And of course, he can then, though, give us some access to other data that maybe he has. And this combination of things brings, first of all, I think, transparency. The second thing, so I think it's more transparent as well to a consumer what we are really evaluating. Okay, sometimes, if you go back in the past, sometimes the evaluation of, a yes or a no, or the amount or the price was somehow a very deep and dark secret of the financial institution. Well, in this new model, there is much more transparency, okay? So a consumer knows exactly the type of information we're going to ask, the type of information we will evaluate, and he has, I believe, more chances to get, a right price, a right amount, and a fair product. And all of that happens, again, in a very transparent way and in a very quick way. And we need to understand that having an answer in a very quick way, in a very quick amount of time, is very important and vital for an SME. I mean, you can't hold an SME for weeks or sometimes maybe months, to give them an answer, because they're there, they have their project, they need their money to start, something on their business. And especially during the pandemic, this is extremely important. So this process is, again, I think, more transparent, quicker. It habilitates new ways of risk evaluation. So it's even more fair to everybody, because this means that the bank can allocate the money to, the right people at the right price. And I think this is very important also for the economy overall, right? So I really think there are many, many, many benefits. And as I said, I think this is the beginning, because we need to leverage together with our partners and especially with Ezbob on this experience and understand what's next on this, because I really think this is just the beginning. And as we said, we are starting to treat new data to evaluate, something that is so core, that is credit. But I think there is much more to that. And we always need to keep in mind that, of course, it has to be a win-win process. Everybody needs to win. The client needs to win, the bank needs to win, and, whoever partners, the other stakeholders need to win as well. So as long as we keep this in mind, I think it's going to be extremely successful.
Thanks very much. And I'd just like to refer back to that second poll question that I asked a while back, and that was, to remind you, has open banking data improved your lending risk and affordability analysis? And the options of yes, generated 37%, no, 3.1% to be precise. I don't currently use open banking data in lending analysis, is 60%. Tom, are you surprised by that response to that poll question?
No, it's like exactly what Lucy said before. I think that the adapter level is still low. I think it will improve. I absolutely agree both with Lucy and Paula. I mean, it's very, very bad PR. It's very technical PR, PSD2. I think they need to talk about the values that that the SMEs and consumer will get by sharing their open banking. And I believe that this is inevitable. It's going to happen. So I think more so through, first of all, I mean, getting data. I mean, you can get it also from the accounting software as well. So I think with the time, SMEs will get used to it because it's going to be all over the place in any other kind of product. But if you ask this poll again in about 12 months from now, you'll see the numbers going to change to the direction that I believe in. Let me go back again to what Paula and Lucy was talking about, the data that we're gathering. I think that at the end of the day, the data is not only for the risk, it's about understanding your customers. And I think that that will help you to acquire your customer eventually much better. So the customer acquisition will improve more with the data. More data you have, more understanding about your customer. You need the need, you understand the needs sometimes in advance, and be able to cater to them at the right time, at the right place, and really be their sort of like the right partners, the financial partners. And I think that's what it's going to lead to. So it's going to be a significant improvement in customer acquisition once you're going to deploy more kind of solution like the Ezbob with more data, with more analytics, not only on the risk side, but also in the behavioral side, understanding your customers, as Lucy said, to actually cross-sell other kind of product, to understand where the trends are going to, in order to adjust your product for that trends. So it's a kind of mutual kind of relationship to that kind of rich data.
So that's actually touched on a question or two that's come in, really about that new way of capturing and analyzing that data and the educational element that comes from it, because it isn't just static, it's quite active. The other point that cropped up here, and which you've just touched on, Thomas, as we get towards the end of this session, is how do we advance this to the SME sector? Paula, you're changing it for your customers. Lucy, you've entered the UK market as, dare I say, an alternative provider of sorts. Thomas, you're providing the infrastructure that is crucial to this. Bearing in mind, Lucy, if I start there, no one really understands open banking, and they probably never will. It's really incumbent on businesses to drive the competitive edge, the choice that is available through open banking. Is for businesses to embrace and drive that. So one assumes that we need more competition and more acceptance of the, shall we say, frustrations of lending as done traditionally to push it into the new areas. Is that a fair comment, Lucy?
Yeah, and I think we're in this really interesting time, I guess, an evolution of what fintech is. So obviously we talk about it a lot around what open banking will enable. So I think, the dream for all of us is to build embedded journeys where we are present at the point that a customer needs cash. And that may not be that he has to come to my website, because coming to my website is almost, like, probably in sort of 2 years' time will probably almost be equivalent to walking into a branch. The future, when we look at embedded finance, is around partnering with, those providers where the customer is most prevalent, spends most of its time, and realize the cash there, which I think brings a really interesting sort of dimension to the market, because when we do that, the brands become slightly less relevant. So I think before, when you look sort of Funding Circle and us to an extent, Iwaka, we were all spending money trying to build brands and marketing. And actually, if you can really embed propositions at the places that your customers are, then, the brand becomes slightly less relevant. And we see that obviously in the US. And I think it's interesting because it means, in sort of a low interest rate environment, it's kind of who's going to provide the cash, and it could be the corporates as well as the financial institutions. And then I think the other sort of really interesting dimension we have now is we obviously see, the big tech companies, sort of less interested in the balance sheet risk, but really interested in the data storage. And actually, for them, the data storage is the gold mine, and having, you know, lending as a service on top of that is just, it's just a product. So I think we're in this really interesting, probably next sort of 5 to 10 years, where the market could transform, more entrants can come into it, so there are less barriers, and all of that will move customers towards open banking. They'll be using open banking for their consumer services, and then they'll start to use it for their SME businesses. And, you know, I think it will all change, and hopefully quicker than it has over the last decade, I guess.
Well, I think sort of history tends to repeat itself. It learns from the past and speeds up the future. And certainly open banking is not known, but the opportunities and benefits are being deployed in multiple ways in areas outside of maybe the lending. But we're coming to the very end of this session. We've tried to capture all of the points around, you know, the COVID pandemic situation we're wrestling with now and where we might go to in the future, and recognizing that the significant number of SMEs in Europe are central to the economies of the countries that they operate in and work across. So I think, Tom, if I just come back to you for a final comment or two, the thing that's intrigued me most of all is the level of questioning is really about how we scale this up. So thank you, everybody, for sending the questions in. It's not about how we push it forward, necessarily. It's about how does this come together? What are some of the benefits in terms of the savings from an internal perspective? What are some of the advantages to the consumers and the different ways that we might approach the whole lending aspect? So it's been really interesting to look at the questions. It's sort of real thirst for detailed knowledge, how you drive this forward. So I think particularly Paola and Lucy, from your bank and your financial institution perspective, that's been really helpful. But Tom, I go across to you, because you did say no surprise when you looked at the 60% return on, I don't currently use open banking, but it just shows that there's an opportunity to exploit, really, doesn't it, Tom?
Exactly. I think that the entire purpose of today Webinar is basically to really get the audience introduced with, I think, 2 leading institutions that actually managed to identify the change in the market earlier, before even the COVID, to understand that they need to have a change, A, in order to cater better the customers, B, to benefit from the change, meaning that the data and the ability to analyze, make better decision and better kind of customer acquisition. So both Paola and Lucy, when we actually worked with them, it was very early stage. You know, at that time, you had only the alternative financing providers, and suddenly you have 2 organizations really thinking about changing completely the way they work in the past, from the traditional into more digital kind of approach. And I think that now with the COVID, they got really like a strong kind of wind to back them up, you know, for all the kind of pre-thinking that they had before, and the courage to do it, because it's not simple. It's not the courage. It's like to change the methodology in the banks. It's to change the culture in the banks. It's to change the way you think in the bank. And being able to do it pre-advanced before the COVID, it's something that you can applaud them. And I think that this was a good session to really see the way to think, and just taking into account the COVID, I think that they are very proud of themselves, of the decision, because they were ahead of the curve in that sense. Last kind of things, you know, for me, both of them I haven't seen face-to-face for a long time. And one of the things that I want to wish everyone, including our audience, to go back to normality, to really, you know, benefit from the social hanging and being together, you know, face-to-face. And if that would be my last kind of comments, because I miss the most.
Tom, thank you very much for that. It's a good note to end on. It'd be very interesting if in a year's time we were back looking at this, not just because of the situation you rightly highlighted. We'd like to be meeting in person, but I think there's almost you can see a sort of fast-track approach to the automation of the data involved in the lending, and I get the feeling that it's going to escalate quite rapidly in the next few quarters. It remains just for me to thank everybody for joining us. Thank you for your contribution to the poll questions. Thank you for taking the opportunity to download those assets. And really, I'd also like to thank you, Paola, Lucy, and Thomas, for sharing your experiences and your insights and trying to map out how we will go forward as we come out of the pandemic and against the background of digital transformation, which is changing the ecosystems and partnerships we're all part of. So thank you for your contribution there, as I say. It just remains for me to thank everybody for joining us again, and I'm going to close the webinar now, and do enjoy the rest of your day. Thank you very much.